What's going on, everyone? This is Stephen Place with Precision Volume Alerts. Happy New Year. It is 2022, ringing in the new year with the markets up just a tiny bit. Apple hit $3 trillion, and today we're going to talk about the January effect. For those of you that don't know, the January effect is this concept that there are a lot of stocks that are beaten down and see acceleration to the downside into the end of the year due to tax loss selling and other structural issues, and those beaten down names can often lead to a strong bounce to the upside. It's a tough trade. That's really hard to do. You're buying the dip in stocks that are in extreme downtrends. And my opinion here is that unless you have a system or a framework that selects trades for you, you can't blindly go into a stock saying, oh, it's down a lot in January, therefore it's going to be a bounce. So today we're going to take a look at Robinhood, because Robinhood had a really nice run right after its IPO, and it's just been, a rolling dumpster fire ever since. And so the question is, do we look to play this for a January effect, or is it a better idea to wait for a fat pitch instead? So let's hop over to some charts. We're going to take a look at HOOD, that is Robinhood's ticker symbol. And it's up on the day. And to be quite honest, just looking at this, it's probably going to bounce, right? It's probably going to see some upside. And if you're a very seasoned short-term trader, you can probably get away with playing this to the long side. You had I'll just zoom in really quick. We'll go to 30-minute chart. You had this instance where there was a very clear trading range that got established. And then what we saw on the 29th was an overshoot of that trading range followed by a pushback higher. Okay, so that's called a failed breakdown. We could also say, hey, these are initiative buyers showing up. And you know what? Just looking at this right now, odds are it's going to see a pop. The question is, and this is where a lot of people get hung up, they expect that January effect kinds of stocks are going to act like this, where it's just a straight shot higher, right? Robinhood IPO'd in, when was this? Mid-August, beginning of August. I guess it was end of July. And then it went from $40 to $83 and then a completely round trip to the downside. To expect this stock to go from $18, let's just say to $50 overnight, it's possible, but in terms of odds, it's probably not going to happen. Why? Because according to our roadmap right here, there are plenty of trapped buyers in this stock. There's a couple different ways we can look at this. The easiest one is to look at the anchored volume weighted average price, the AVWAP, and we can use a couple different lines, but the two I'm looking at are this one right here, which is the volume weighted average price from the highest day's trade to currently right now. So what this tells us is that it shows us the average price that someone bought the stock basically from that high, and it's all the way up at $40, right? Which means that the average buyer who purchased this stock in basically for the past 6 months is at least a 50% drawdown. That's wild, right? That's pretty nuts. And so just imagine if you are an owner of this stock, let's just say at $40 a share, and then it has a spike up to, $35 a share. Then you start really thinking about, am I going to try and hold this and get it back to break even, or should I just go from a massive loss to a small loss, or should I try and hold it for the moon? So the way that psychology normally works in the markets is that after a period of strong movement to the downside, it's rare for stocks to go straight shot up again. Okay. Now 2021 kind of changed things. A really good example of this is going to be space, where space had two massive rallies, right? And that's sort of the exception, not the rule. So if we look at Hood, if you do want to play this to the long side, the first thing you need to ask is where should you be looking to exit? Are you going to truly be a long-term holder and hold this for 3 years? If that's your deal, that's an investment and not a trade. But if you are looking to trade this and you want to play it here, you need to ask, where are sellers going to be extremely incentivized to bail? So we've got the anchored VWAP from the range high back in August. We also have the anchored VWAP from the gap down at the end of October. That was after an earnings event. And we just saw continued acceleration and bloodletting to the downside. Okay, now that VWAP is down at 25 quarter. So that would be a reasonable upside expectation for where this stock can go. Now, from here, we can start looking at our volume roadmap, and that's going to be on the right side of this chart. And we can see that there is this nice little volume shelf right here that coincides with prior support, potential resistance. You've also got a low volume node that coincides with that anchored VWAP right about there. And so you're starting to see a couple different levels overlap one another where they start to reinforce one another. So if you were to say, okay, I want to only buy this stock when it's primed to go significantly higher, it's just going to need more time, right? Odds are what's going to happen here is, let's just say it goes up. And I'll just draw an example of we could just use our roadmap and say, okay, what kind of bullish price expectations can we have? Let's just say we do get a rally and we get a move from 18 to 25, right? That's a 7-point move on an $18 stock. That's about, 60%. That's not bad. Odds are if we come into that and there's not any catalysts with any fundamental changes, we're probably going to find some sellers right there. Okay. That's just because there are trapped buyers who are willing to sell close to break even if they can. All right. So let's just say it goes sideways and chops around for a little bit. Maybe it starts to knock out a higher low, right? And that's very possible. And then let's say that it manages to break out above this, all right? And then it'll probably, what will most likely happen is that this anchored VWAP from those range highs will start to come down. I'll just move this out of the way. That was from a trade that I did try and buy the dip and hood and it didn't work. So let's just say that VWAP comes down to catch up with price, and that's going to coincide right around that volume shelf. Now, if we get there especially quickly and all those things line up, you can actually look at it to the short side. But if that happens, you're probably going to find sellers again, and maybe it comes back and retests the prior resistance, potential support. And then you've got the case to make saying, okay, we're going to clear this VWAP, and then the majority of buyers are now in an advantageous position, and then we can get some momentum. Okay. Now, all of this is absent any changes with earnings. If they have, let's just say they manage to pull out a really good earnings number and then you see a gap and go, that changes the liquidity dynamics and the participants that are involved in the stock. That's how fundamentals will affect price. But all of the things being equal, this is more likely the case, right? So it's probably not going to be a straight shot up. It's probably going to go sideways for a week or two or three. And by the time we get a transition from this bear market to a bull market, it's been 4 months. Now, again, if you're a very talented short-term trader, this is a very good, this, in my opinion, has potential for an increase in volatility and variance and things like that. But if you're trying to swing trade this and you're trying to just buy some options looking for massive returns, it becomes harder. It becomes more difficult of a trade because when you buy calls, you have to have impeccable timing and you need to see the stock drift higher. You need to see volatility all move in the same direction. And if this map were to play out, it's going to take 3 months for this sucker to bottom at least, right? Again, things can change through earnings, but that's probably what's going to happen. We can also take a look at another example. This is in Coin. All right. Coin had a really nice, I think the initial value after its IPO was much lower than where it opened and where it traded. So Coin actually traded all the way up from 300 to 400 and then has round tripped ever since. And look at how, let me see if I can find a shape to work with. Look at what happened after it finally bottomed. The bottoming process before it made another leg higher. Look at this. It took from May to October. That's pretty much a 6-month bottoming process for it to really get going again. And since then, it had a nice move up again to 360 and then it round tripped. Okay. And it's probably going to take a little bit longer for it to bottom out and exhibit momentum again. Remember, these are momentum stocks. All right. Do you want to be playing momentum or do you want to be playing mean reversion? All right. 2 different strategies. So if we look at how we can use this crush that we had in Coin as an analogy to how Robinhood could play out, right? Where you have, I mean, this is as good of an analogy as we can get, where, you know, you've got, let me see where my arrows go. You've got this level right here where the stock came up and caught that volume weighted average price. And then it retested it once, twice, and then the third time, that's when it had that massive move. Now think about the psychological capital involved for you in this. All right, let's just say you tried to buy the breakout a couple times through, you know, June through October. It's been exhausting, and odds are there were a lot of market participants who, you know, into that kind of move to the downside. After failed breakouts, they probably started to take the stock off their watch list. They weren't looking at it. They weren't participating in it. We didn't see a whole lot of option flow and things like that, where it just sort of quiets down in terms of speculators. And then after that, we finally get that breakout above 270, and then it has another push to 360. That's a 100-point move on a $270 stock, right? That's really good. That's real money. Since then, it's round tripped. But again, for the conditions to see strong momentum to the upside, for those conditions to happen again, it takes time. And so, yeah, you can probably play the January effect stocks, but you're going to need other conditions and other reasons besides, oh, it's down a lot and I'm going to buy something in January. Okay, so we use our roadmap to identify and dictate what kinds of positioning we want to take on. And we also use that to figure out who's stuck in a trade, who is positioned very nicely and has no reason to sell, and that can lead to serious upside drift, who's stuck in a trade and they continue to sell that stock, just not all at once because they're really stuck. All of those things are answered inside of our roadmap. So to get access to a free training on this roadmap, and I do believe it can change your trading for the better, especially if you're looking for something new, a little bit of a different view on the markets headed into 2022, we've put together a free training for you. Below this video is a link that will get you access to it. You'll see the power of the roadmap, the power of using options with the roadmap to tell us what's the best option to buy, what maximizes our reward relative to our risk, as well as a way that you can get access to our portfolio here at Precision Volume Alerts and all of our trade alerts. So below this video is a link that you can use to sign up. I'll see you on the other side. Have a great day.